Hello kids and welcome to Kitty Finance. Today the topic of our discussion is what is a corporation? In other words, what is a company? What is a business? There are many different forms and shapes and terms used to describe a company. We will talk about what these really mean in a very simple way. So hang on and enjoy the ride. Now you might ask me, why do you say enjoy the ride? Well, the reason I say that is there are so many different aspects to a company or a corporation. There are so many different types of forming a company, so many different legal entities a company can take, and there are so many other details around a company that it is almost fascinating. No matter how much time you spend in understanding a company or a business, there is always new things that you can learn. I learn new things almost every day. So it is an exciting aspect. It is a very detailed subject to learn, but it is also a very rewarding one. And you will see, soon learn why it is so exciting and so rewarding, because once you understand what a corporation is, once you understand what a business is, there is no going back. You will be a successful investor. You will be able to determine what a good company is, what a fair company is, and what not a good company is, and where not to put your money. So it is fundamental to understand all these different aspects around a company, so you can be a sound investor and you can make your decisions based on solid understanding. So first of all, let's look at one of our favorite companies, Apple Computers. So this is Apple's website. I went to www.apple.com, and this is what it shows. So as you can see, the first thing that a company has is what we call products. Okay, this company has one of the most successful products is the Apple iPhone, and then the second most successful product is the iPad that they launched recently. And then you'll see other products that they have on the top on the website. Okay, now what else would you define a company structure to be? Well, a company has first thing is a board of directors, and a board that actually runs the company and determines what the company's future direction and product strategy and overall company strategy would be. So let's take a look at that. One very good way to look at and navigate a company's website to get more information is to go to the sitemap. In the sitemap, you'll see most of the relevant things which will define the website structure and would have information coupled in different formats. So for example, in this format, you'll see news and events, which talk about what the company has been doing lately and how it is being covered by the news media channel. And this talks about overall the company. It talks about contacting the company, but public relations, we'll go into public relations and why that is very important for understanding the company's current successes as an investor. Here you have an investor link which specifically talks about the information that is relevant for an investor. So they cover the 10K, which again we will talk later on. Has the earning release or the earning report. We'll go into details of what to look for in an earnings report, and also there are earnings calls that you can attend. So there's a lot of detail, and that's why I said it's an interesting journey. I don't want to bombard you guys with a lot of information, but there is indeed a lot of information. We'll go through it steadily and we'll say, okay, what is the most important thing you need to know to be a good investor, and then what other details can you just leave out which are not that relevant. All right, this section covers the current stock price, so we'll cover this in more detail as well. As you can see, this company is covered under NASDAQ, which is one of the listing agencies. Again, we'll have a separate chapter on what NASDAQ is, what these listing companies are, but this is where the company stock actually floats. And this talks about the current price of the stock, talks about the change, the daily change, and the volume of the stock. This is the outstanding shares or the stock shares that the company has in the market. Again, don't worry about all of this. We'll cover all of this later on. Okay. So this is just an example of information for investors. Here it talks about where to buy. So it talks about its products. So every company needs to have a good way of identifying what we call distribution channels of how would a company's products be sold. There are a lot of different ways that different companies sell their products, depending on the type of company, depending on the type of business model the company has. They would have different types of selling. So a typical example is the company Apple Computers has a lot of retail stores. Okay, so you can see Apple Retail, but then they also have other resellers. So again, we'll talk about this in later on chapters when we go into more details of what you really need to know as an investor and other things that you can actually ignore. Now it talks about the Mac computer. It talks about all the different things, the details about Macs. It has software applications that go on Mac. There are accessories that you sell with the product, that they have listed over here. So you'll have the same structure for the iPod as well. You have iPod, you have accessories and other resources. Same thing for the iPhone. It'll talk about the features and all that. So this is all product information. And again, if you're researching a particular product and trying to understand what the value proposition of the product is, and when we say value proposition, it is really what is the key features of that product that make it successful. Because every product, anything that you sell has to have something unique. If you're selling a lemonade, for example, you need to have a lemonade that is unique, that is better than the lemonade somebody else is selling, right? So that is the unique proposition. And then it talks about other things like support, information on support and whatnot. All right, so going back up, the first thing I wanted to show you was the company's management team. That is typically the most important thing to understand when determining the strength of a company. Here we can see under public relations, you have the Apple leadership. Let's click on that and see. So here you can see the bio data as well as the names of the top executives of Apple Computers. As you can see, after Steve Jobs' demise, Tim Cook is the new CEO. So when you click on that, it talks about his profile and bio data. Then you can see other board members. For example, here is Eddie, who's the Senior Vice President of Internet Software and Services. And what this really means is he is responsible for the overall business that includes the internet software, so online software, as well as services. So we'll talk about what services really are. But in essence, you have two different aspects of every company. They have products and then they have services that go complementary to products. There are some companies that do only services and not products. We won't get into that right now, but so he's responsible for that. Here is Scott, who's responsible for the iOS software, which clearly is the operating system on which your Apple product works, your iPhone and iPad. Jonathan is the Senior Vice President for Industrial Design. So this is a different department altogether, where they're responsible for the industrial design portion. Again, we'll cover this in more detail. Bob is responsible for the hardware engineering, as you can make out. That involves the hardware aspect of these devices. So everything that goes on these devices has a hardware aspect, and he's responsible for making sure, for example, that the chipsets that are ordered with the phone are the right configuration, that the actual physical plates that go on the phone and the pads are appropriate and all of that. So he's responsible for the overall physical aspects of these devices. Peter is the Chief Financial Officer. He's responsible for the entire company's profit and loss, account keeping, has all the financial aspects, which determines how much of cash the company is earning, the revenues, what the cost of the company, cost structure of the company. So very simply put, we will talk about the balance sheet and all of that later on in the future chapters. But very simply put, he is the money man, and he determines how much money is the company making and how much company is the money spending, right? And so the net is the profit. So if you have if for example the company makes $100 but ends up spending $80 in running the company, to do day-to-day stuff, giving salaries of all the folks that work in different departments, legal costs, costs for actual physical the goods, like the physical hardware of the phone and stuff like that. So all this money that the company spends, you take that out of all the money that the company makes. The Chief Financial Officer keeps control of all of that, and based on that, he also helps make these other board members make decisions on where do we invest, how much money do we have to invest, and how much money can we keep, or are we losing money on a certain business, all of that. Okay. Philip is the worldwide product marketing vice president, and his responsibility is to market the products and market the company. And again, we'll go into more details later on, but very fundamentally, it is, the company needs to promote itself. The company needs to promote its products, its services, its brand, and the brand is, what the company stands for, so that people recognize that, hey, this is Apple Computers, and this is what Apple stands for. Whether it is quality, whether it's the phone, whether it's the ease of use, the coolness factor, the solid technology, all of that. So marketing involves a lot of different functions. Okay, and now who can tell me what the general counsel is? Well, general counsel is basically he heads the legal department, responsible for intellectual property and all the other aspects around legality and all of that. And we'll cover that in more detail later on. Jeff is the senior vice president of operations, and operations involves things like distribution channels, involves having agreements with what we call resellers, which are people or companies that actually take your product and sell it in different markets. A simple example would be where Apple Computers needs to sell its products in China, for example, right? And now Jeff can't sell it by himself, nor can his team. He needs people that, or rather businesses that can actually take the Apple phone or the iPad or whatever and be able to sell that in different markets. So operations takes care of all the physical logistics of having the product delivered from the manufacturing to the hands of the actual customer. Now, does anybody know what the board of directors is? That's right. So the board of directors is the team that actually governs the management team right here. They help and guide the management team in many aspects. They don't necessarily have a day-to-day interaction with the management team, but they are responsible for the overall helping the questions that the board might have in terms of any strategic direction, any acquisitions, or any major company restructuring that's really changing the company's the company's current working structure. So for example, if Apple was to break away its iPad division and say, okay, we want to make the iPad division into a separate company, we don't want to hold on to the iPad division, that would be an example of restructuring, where the board of directors would make a voting, or they would kind of work with the management team on that decision. Or if there's a major acquisition, an acquisition is when a company buys another company, its people, its products, its technology. That's again when the board of directors would come in and help with certain aspects. As you can see, the board of directors come from different companies. They are not necessarily working for Apple. So Bill, for example, is the CEO of Intuit. This is the company that makes TurboTax, and then of course the CEO Tim is also on the board of directors. You have Millard, who is the CEO of J.Crew. Former Vice President Al Gore is also in the board of directors. So you have different people from different companies. Arthur is the chairman of Genentech, which is a biotechnology firm, so nothing to do with technology as such. I mean, in the sense, the line of business that Apple is, it's more in the biotechnology business. Avon Products is again a very different line of business. So it's always good to have a board of directors that comes from very different backgrounds. As you can see, this is a software only company, and there's Apple, there's a different company, this is absolutely non business person, this is a defense company, and this is a biotechnology, and this is Avon Products is totally different. So you can see that different companies have different representation in the board. So this is very quickly what the management team looks like. Now, if we go one step back, there's a very interesting thing called press releases that is very important for an investor. So as you can see, in November 2011, Apple made a press release around the GarageBand is now available for iPhone and iPod. So anytime the company is making any progress, or the company needs to report something to the world, what we call to the market, then they actually do a press release where they talk about the details of what that is. So they here as an example, where they're talking about the details of the availability of GarageBand for iPhone and iPod. They talk about the pricing and availability, and they also have press contacts, because the moment they put this article out, there'll be so many different media, so many different news channels that actually want more information on it, that they have people assigned. So there is the PR and AR, which is the analyst relations and the press relations folks over here that actually help with such information. So going back to the main sitemap, as you can see, there are so many other departments that are needed to run a big massive ship like Apple. There are so many different aspects. So we saw the main management team, but there are different departments that come under the management team. We saw the public relations, the AR and PR guys that work with the media. There is a support and services. These are teams that actually help support the product. So if there are issues with the products, customers can call them. And then services teams are, let's take a look what they have here. So services team usually helps with any additional services that the company rolls out on the product. A typical example could be, for example, you buy an iPad and you want an educational service on top of it. So it's an educational I don't know what they call it, but there's a package where you can actually learn how to use an iPad or how to create a business application on top of an iPad. That'll be one example. So there are other services, in companies, enterprise companies, where the company will help you with supporting your business. And there's so many different types of services depending on the company. We can talk in more detail on what those are. But essentially, it is something that sits on top of the product. So a customer buys the product, but then they also need some help with the product, whether it is installing the product or configuring the product or changing the product to fit into their own environment, or they have something goes wrong with the product and they need fixing of the product. So there's so many different types of services that can be associated with the product. Those are covered by the services department. Then you can see procurement is another department. Procurement really is responsible for purchase decisions. So they typically would procure either products or sub products. For example, buying an iPhone, they would probably procure the chipsets of the iPhone or the other electronic gadgets or components of the iPhone and whatnot. So they are an integral, very important part of the company, but they're also responsible for the actual shipment of the finished goods and figuring out what the right inventory levels are. For example, if they have to ship these products, where should these products go? For example, how many millions of these products should go to China, how many millions should go to Canada, to different parts, to India, so different parts of the world. And again, in each of those countries, there are again distribution channels. Those are again companies that actually take the product and sell those to the end user. So again, how do you how does Apple, for example, after manufacturing this in millions of units, where do you send what units and how do you track those units, and all of that. So there's a lot of detail, a lot of logistics involved. So procurement typically deals with all of that, both buying as well as managing the operational part of these products. Okay. Before we talk more details about a company and the other details about a company, I want to show you, there are so many different types of companies, so many different companies are trying to do different types of business. Here's a very quick snapshot of different well-known companies. MasterCard, Visa are obviously credit card companies that we know. Mobil is an oil company, the oil that you put in your cars. Old Navy is a retail. We have clothes manufacturing vendors like Old Navy. Red Lobster is a food company. I'm sure we all know about. Safeway, we all go regularly, we know what that is. Same with Taco Bell is a food company. Remax is real estate company. They help you buy and sell your homes. We all know McDonald's. We know KFC. Holiday Inn is a home a hotel chain. It's a home away from home is their slogan. Home Depot, we all know, is where our dads get stuff for repairing the home or for, stuff like paints and wood and plants and all of that. And so there are different types of companies. I'm trying to point out is different types of companies that have different what we call business models, and that have different lines of business, that they do types of different they provide different value to the customers. So there's a question about how do these companies do business in their segments, and how do they be who they are. So there are so many different types of companies, and they do different business, but how do they stay in that business, right? So there's something called competition, which is companies that do similar business. So an example is McDonald's. Is in food business, and Taco Bell is also in food business. But more importantly, McDonald's also has companies like Burger King, has In-N-Out, right, and has Jack in the Box. There are so many other businesses, similarly, that compete with McDonald's, trying to take away their business. So how do they stay where they are, and how do they compete with those other businesses? Again, this is very common in car manufacturers or automakers, where there are so many different types of automobile makers. How do they differentiate themselves, right? We know Honda, we know Toyota, we know Nissan, Mazda, and then there are luxury brands that we know. There are so many different types of cars. How and why would a customer go to a particular car maker? Because at the end of the day, these car makers want to get customers to themselves, to their business. So we discuss things like product and services and public relations and marketing, and product groups like engineering groups and human resources. We discussed all of that. One thing that we didn't discuss was the following. What we didn't discuss was brand. So what is brand? Well, brand is a form of recognition that the company has, so that the moment people see that brand and they see the logo. So this a typical design is called the logo. I'm sure you guys know about this. The moment they look at this logo, they associate themselves with that brand or with that logo, right? Now, what does associate means? What it means is that when they see that logo or that brand, they want to say, yes, I am either part of that, or I like that, or I own that, or I somehow, I am associated with that brand. Versus a bad brand or an unknown brand, if instead of BMW you had, say, Maruti, right? It's an Indian manufacturer, it's a very low cost producer. It is a great automobile, or for example Mazda. So you take an example of Mazda, right? It's a great car, runs perfect, is a perfect price. But if you're just talking from a brand perspective, just to try and compare a brand, would you really rather have a Mazda, or would you rather have a BMW, right? From a brand perspective, BMW has a much more what they call brand equity, or the amount of brand recognition it has, versus a Mazda, for example, right? Or a Nissan or a Honda or a Toyota. They have brand recognition as well, but as a premium brand, BMW has carved out its name as a premium brand provider, whereas a company like Mazda would be a lower cost provider brand. Same way with Honda and Toyota. A Honda would be a brand which is known for perfect cost, good value for the money, and reliability. That's their brand. So the point I'm making here is that apart from products and services and legal and all of that, a brand and the brand recognition is a very important thing. Every brand gives a sense of thought in the mind of the consumer. So when you look at the brand, you have certain thoughts that go in your mind. When you look at a BMW, you think about a luxury. When you look at a Mercedes, you look at a luxury. When you look at a Porsche, you look at a sports luxury, higher end. If you look at a Honda, you look at a family car, from A to B kind of thing. So understanding that brand recognition is very important. Coming back to the Apple example again, Apple has carved its brand from a boring, a computer maker to a jazzy. They basically made computers into, fun things, right? The iPad, the iPod, the iPhone. These are just phones and laptops. I mean, the forms of computers, but they made them into such wow factor. That is again a form of brand. What image do you have when you look at Apple in your mind, right? There is a certain image that goes through. That is what we call brand. Here's yet another picture of different companies. Now, if you look at Hewlett Packard, HP, which is a computer maker, versus you say Dell, which also makes laptops and other kind of computers, which one would you buy, right? There is a certain brand associated with a company, and when people look at those brands, they have certain things that go in the head, in terms of quality, in terms of kind of price they will get, or the types of laptops, whether they're very jazzy. For example, when you compare this with Apple, you compare HP, Apple, and Dell computers. Apple is clearly, the sleekest and the most wow factor kind of computers. But when we're looking at heavy servers, companies like HP and IBM and Dell would play in that same factor, right? So there are different companies. When you look at routers and things that run the internet, Cisco is clearly a winner. So a company brand is extremely important. When you evaluate a company, you have to understand what they stand for, what is their brand, how solid is that brand, because we'll talk in more details what we call economic moat, but every brand has certain benefits, and having a strong brand means the company can continue to have business and continue to have customers for a long time. And that's why creating your own company's brand is very important. Everything that we do is ultimately so that we can have a solid brand recognition, apart from obviously running a healthy company. Now, another quick thing I wanted to show you was related to brand was, is it true that only large companies that have been around for a long time have a good brand? Well, not necessarily. Groupon is a typical example. I'm sure you guys have either used Groupon or your parents use Groupon, or at least we have all heard of what Groupon is, right? Groupon provides you deals, day-to-day deals which are highly discounted. So Groupon was what we call a startup company, a company that is not a public company like some of the bigger names that we saw in the previous slides, or for example, Apple is a huge public company, has been around for many years. Groupon is not a public company. It is a private company, right? It's what we call a pre-IPO. It's not been filed as a public company. But in this news that you see as of today, Groupon filed for one of the biggest IPOs, and the news reads, since Google. So it is a huge company that has done really well, has created a brand for itself, has given value to its customers, and that's what happens when a company has been doing well considerably for a long enough period of time, and it has this large customer base, has a lot of fan following, has a huge positive revenue, or what we call cash flow. We'll talk about that later on. Then the company can decide, hey, let's this is a good time to go public. And when the company goes public, they all make money. At least the employees and the founding members, the people that actually started the company, they all make money. So as you can see, Groupon raised 700 million after increasing the size of its initial public offering. It means the company has done pretty well for itself. So as you guys, when you grow up, as you go on to either invest in companies or form your own companies, this would be one of the dream moments when you can take your company public and get valuation and become a public company, and hopefully be extremely rich and wealthy at some point. So this is an example of showing that companies don't have to exist for a long time to have a solid brand. If the companies are providing good value to the customer, and they have a good customer base, they have a good positive cash flow, they're making revenue at the end of the day, then they can go public, and they can have a brand which is well recognized. Now that we discussed brand, there is another important aspect of a company, which is a company's public ranking. Right. So every company we discuss, has products, has services, has a board. They generate revenue, so they make money. They have cost of different types. Again, we'll discuss that in future chapters. And then they have what we call the brand for which the company stands. But then, they have a certain function as well, right? Every company delivers a product or a service, and so they provide some value to the customer base. But then these companies are ranked based on the type of products or services, what we call the type of vertical they are in, or type of business that they are in. They are ranked by different agencies. Here's an example of the fastest growing Asian companies. Don't worry about the ranking and what the companies are, but here's just one example of some firm ranking these companies in a different, in a specific order. Now here's another example of a company ranking. This is the Fortune 100 best companies to work for. So now they're not being ranked for necessarily the product or the revenue or the the size they're of, or the type of vertical they're in, but it's based on the best companies to work for. What are the best companies ranked by employees in terms of the kind of benefits that they provide, the kind of work culture that they have. How are employees liking that company? Are they happy? Are they enjoying? Do they feel they like to go to work? Are they being rewarded appropriately? So there's so many different things that employees expect, and so these rankings are based on that. So we saw this Genentech is obviously number one. There are many other companies that you would have heard of that are among the top. So this is another type of ranking. So the point here is that there are different ranking agencies that rank companies based on the different aspects of their brand. It doesn't always have to be for example, Genentech is known for its it's a biotechnology giant, medical giant, but there's a different aspect to their brand. It's a great place to work, so that's a different spin to the brand. Same way McDonald's is known for its quick food and its burgers, its ice creams that kids love. So they have associated that brand, but they might have a different spin to that brand as well. All right, so there are different rankings, and one company could be ranked by different agencies in different ways. So the same company could be ranked as the best company to work for, but they might also be ranked as the fastest growing in a segment, or they might be ranked as the most technology innovations in a given segment. So there are different ways a company can get ranked, and all of these help a company in terms of their survival, how they would do business, because ultimately ranking is what determines how customers would look at these companies. And if customers look at these companies in a positive way, the more the rewards and recognition these companies get, the more customers would come to them, obviously if they have good products. So this is a brand, and rankings and awards are a very important integral part of a company's day-to-day function. Okay, so we have spent almost 30 minutes talking about a lot of different things about a company, and like I said in the beginning, you'd enjoy the ride. We haven't even got started. All right, so there is so much information, but there's so much fun, and we have a long time. You guys are still learning about this, which is a very important aspect. You're learning early. Most of us started when we were pretty late in our lives, and that's why this was my inspiration for opening this whole project, Money for Young, or Kiddie Finance, to help young folks to learn early, so you have enough time to re-listen to these videos, to ask me questions, to participate in the classes, and we'll go over many of these details again and again and again, right? So just if you didn't catch anything in this video, don't panic. There's nothing to worry about. You can re-listen to this video. You can come for makeup sessions or repeat classes, and you can ask questions, and this will be available for you to review offline as you wish. And we'll repeat this information again and again. So take it easy. Just listen with an open mind. So in our next class, we will also talk a little bit more details about a company. If you guys are ready. So we'll talk about companies' profitability, their growth, how companies are being analyzed. So for example, this company Apple, some people are saying it's a great company because of this reason. Some people say, well, it's not so great because of this reason. So we'll talk about all of those things, maybe in the next chapter, or maybe in a few chapters from now. All right, so just to recap, I really like this sample organizational structure. They also call it org structure. You typically have the president, and then you have different products, and these products could be products or services depending on the type of company. So if you're talking about McDonald's, you could have a product could be like burgers is one product, and they've lately started to sell salads and burritos and sweet products, so that could be one example. Another example is, say, let's take an example, Netflix, right? Netflix has online streaming as one example. Then they have CDs, the actual physical CDs that they ship is another example. So that would be one. Apple is a great example. We saw iPod, they have Mac, they have iPad, they have iPhone. So each of these is a separate division. Each of these divisions have these following segments, right? These following departments. So there's R&D, which is research and development. These are the guys, like we discussed, they do research of, hey, what do we build next? When they came up with the iPhone, when they were done with the iPhone, they said, okay, what do we do next? And so there is typically a division that sits above all of these, which is called the strategic, the CTO, or the Chief Technology Office, or the strategic, corp dev team that they haven't shown here, but that then looks at the overall trends, and they say, looks at, okay, do we need to create a new division called the iPad division, which will make an iPad. So they come with that high level concept, and then they create that division, and then they start to do more research, right? So assuming that's there, then so they would say, okay, we need an iPad, so create this division. They start to hire and form these different teams. So the R&D team, the research and development team, will say, okay, well, what is an iPad? Let's look at iPad would be something similar to an iPhone. Maybe it'll be bigger than that. Then they say, okay, how big should it be? What are the functions? Should it be exactly similar to the iPhone? Should it have features which are different? If an iPad, for example, is for reading magazines and pages, should it have anti-glare so that it doesn't glare in the sun? Things like that. So they look at those features and they say, okay, how do we make it the most efficient way, so it's not very heavy, it doesn't get too warm, because we don't want it to heat our customers hands when they're holding it, stuff like that, right? So that's what the R&D does, and they actually create the product. The manufacturing would be so R&D does that conceptually. They put it down as, hey, this is what we want. Manufacturing actually goes and takes out the machine and starts to carve out and starts to create that iPad from ground up. So they get the glass of the iPad, they get the metal portion, they get all the circuitry inside, the chips and all of that. They get it together, they create the shiny looking iPad, the battery and all of that. So they get it together. Accounting and financing is looking at the finance portion, right? So they are looking at, okay, if you have to make an iPad, how much would it cost me? And so they break down what they call bill of materials, BOM. Won't go into details, but they basically say, how much would a single iPad cost me, right? And then once it costs me so much, then they work with, so they basically monitor all of that. They're looking at how much are we going to spend, and they kind of monitor all of that information. How much would we give to our manufacturing? How much would we give to our other third party from where we get all the circuitry and other things that we get, it's the companies that we work with. So they look at all the money inflow and outflow. Marketing then says, okay, once we have this iPad, it'll cost me, say, $200, as an example. Hey, we want to make at least $100 profit on it, so let's sell it for $300, right? Or we want to make at least $200 profit, let's sell it for $400. Then they say, okay, what should it what kind of advertisement should we do so people can come and take a look? We have all seen advertisements in TVs. That's what these guys do. They create all the advertisements, they do all the marketing, they write all the papers and documents so people can understand what this is, all of that information. Okay, we can go into more details later on. And customer service, like we discussed, they help if there's a if customers have any issue with those iPads and all of that, so they help support the customers as well. Then we have these divisions that you can see. So these are all the product divisions, and now we have these divisions, which is the HR, human resources, that is responsible for many other activities, hiring people and making sure that the company employees are doing the right thing. So ethics and other legal responsibilities, that the employees need to kind of follow, all of that. Procurement is, again, like we discussed, they're responsible for buying and shipping and making sure the products reach the right destinations, so that they can reach the customer in the right time, ordering enough units so that there's no backlog, all of that. Okay, we discuss accounting. PR, we again discussed, they create the buzz, they talk to the media guys, the news channels and all of that, to create all this information. So if the iPad is coming out, say 3 months from now or 6 months from now, they will start telling media, hey, we're coming up with a new iPhone 4S, for example, and this is when it'll be launched, or this is what we'll be doing, these are the cool features. They start creating that demand, so people say, hey, I really want that one, I really want the iPhone 4S, it's the best thing ever, I can't live without that. So that's what they want to do. Training and safety is basically training the employees on different aspects, making sure they're safe, the things like fire code in the building, making sure employees have the right seating, the right lighting in the offices, all of that. Okay, and the legal is responsible for all the legalities around, we won't go into detail, but things like intellectual property of the products, making sure that the employees are following all the legal guidelines, making sure when the company does any announcements, they're legally covered, the products that they design are legally covered. If there are any issues, then they take care of that. Okay, so we can discuss these in later chapters as needed, but this is just an overview. So a lot of information we have discussed, and like I said before, you can re-listen to this video as many times as you like, so it kind of goes into your brain. But if you already understand this, or this is already something very common for you, that's cool. We can go on to the next level. Okay, so now is the time for question and answers. Okay, the first question: what are the various departments in a company. So now you don't need to name all of them, but try and list a few names that you know. Okay, I'll give you 30 seconds to think, and then you can answer. Your time starts now. So think about the structure that we looked at the Apple's website. There were things like public relations and legal, right? So there were a couple of others. Think about them and tell me. Right. So these are the different departments as an example, right? We have R&D, we have manufacturing, accounting and finance, marketing, customer service. Then you have these divisions which are called the common divisions. You have human resources, procurement, accounting and financing that overlooks all of these other ones, PR, public relations and analyst relations, training and safety, and legal. That's an example. And then you have the management team that sits on top of this, and then you have a board of directors that sits on top of that. Okay, my next question: what is the most important aspect of a company? So here would be examples like revenue, the cost, R&D, the marketing. All of these are important, but there's one thing that sums all of these together and says, okay, this is what the company is all about, right? Okay, I'll give you 15 seconds to think about this one. Right, it is the brand of the company. The brand determines what the company stands for, what the company's recognition, how the customers perceive the company, how, depending on how good or bad the brand is, the company would do in most likely cases that's what the company's net earnings and revenue and how the company's overall success would be. And again, brand doesn't always have to be just good or bad. Different brands mean different things. We discuss, the BMW is a primary brand, whereas Honda is a value brand. They're great in their own respects. Honda earns probably the same or more money than BMW. I don't know for sure, but they do so much volume business. They sell so many cars to the mass people that they do make money too. So what I'm saying is, it doesn't mean if there's a value brand it won't make enough money, but it's just that's what the brand stands for. So brand is really an identity. It's like, what do your friends think you are, right? What do they perceive you to be? It's the same thing. Okay, next question: which division is responsible for product innovation? Okay, for this I'll give you 10 seconds. Time starts now. That's right. It is the R&D division, the research and development division. They are responsible for creating new products, designing new products, getting new products to the market, launching new products like the iPhone, the iPad, and different companies have their own R&D division. Some products are not as jazzy as the Apple products. Dell has its own laptops, and they continuously do innovation on creating the best looking laptops and the most reliable laptops. Again, every company has their own unique, what they call the unique selling proposition. So they look at, hey, what can we do business in that will make us very, very unique? So the main point is understanding how you can be, your company can be unique, and then being able to go after that market and sell into that market. Okay, my next question is a little tricky one. What, or rather, let's say, how do you determine a company is solid? Oops. Okay, so again, there might not be just one single answer, but I want to see what your how innovative you can get to this. You have 30 seconds to think about this one. Your time starts now. . Now don't answer, just think about it, and then we can go through the answers. Okay. So a company can have, there are many different ways to look at a company is solid or not. There is not a single way. There's no silver bullet. So the company's brand is very important. If a company is known for a great brand, things like companies like McDonald's, company like BMW, Apple Computers, there's so many different companies that have different brand recognitions in different areas. So knowing that what that brand is and how well it is known, how well it is seeded in the minds of the consumers is very important, right? If consumers respect a brand and they are they love a brand, then chances of it going out of business are very, very less. Okay, and that is what we call wide economic moat. If a company is so well entrenched in the customer base that it's customers can almost not do without it, then it is considered a strong brand. Companies like Coca-Cola and Pepsi, for example, are a strong brand. Companies like Wrigley's chewing gum is a strong brand. Chocolates, Cadbury is a strong brand. Starbucks is a pretty strong brand. So companies like this, which customers have loved over time, are strong brands, they do return. But then there are many other things that you have to look at, which again I won't cover in details, but understanding the company's revenue situation, their balance sheet. Like I said before, we will cover the balance sheet in the future chapters, but to give you a quick look of let's see, did I close the balance sheet? Yeah, I probably closed the balance sheet, but the company's balance sheet determines how well the company will do over time, or has been doing, in the past, and that determines the company's the different aspects of the company's functioning. How much money they've been making, how much they've been spending on goods, how much they've been paying the employees, so net over time, what has been the return on the investment or the return on equity. So there's a lot of different terms, I won't cover that, but looking at numbers is another way to understand over the last many years how has the company done. Then looking at how happy the customers are with the company. So brand was one way of doing it, but understanding how our customers using the product, are they seeing demand, and that again kind of ties into the balance sheet, so you can look at that with revenues. But if you know a company and that company is going through a lot of demand, Apple was an example. iPad has been selling like hotcakes. You obviously know there's a demand, so it is a good company to invest. But then you also have to look at the long term. You have to look at will this demand stay forever or not, right? Company might be building great products, but is that demand for those products going to stay forever, or is it going to go away after some time? That's a very important consideration as well. Okay, so there are many other ways that we can look into, but this was just a start. Okay, and a final question: who are the board of directors of a company, and what is their function? Our time starts now. I'll give you 15 seconds. Okay, maybe 30 seconds. Okay, time is up. So the board of directors is, like we discussed, the board of directors is the board that sits and governs the executive team, the management team. So if you go back to let's see, do we still have Apple open? It's not open. So anyways, we looked at, okay, let's just go quickly. So we looked at Apple. Really? And then we looked at the sitemap, public relations, Apple leadership. So this was the management team, right? And these were the board of directors. So the board of directors governs many of the decisions that the management team takes, As we saw, the CEO is also on the board. That is quite typical. But we also see the board of directors comes from different companies. Intuit, J. Crew, Al Gore, who's the former vice president of the U.S. Northrop Ronald comes from a defense company. Genentech is a medical biotechnology company. Avon Products. So you see that it is a very diverse board from different fields, and they get their different experiences of different lines of business, and so they can make decisions for these folks as and when appropriate, when a company is buying or selling or doing a major restructuring, or when they're spending like billions of dollars, or again, depending on the size of the company. In case of Apple, it'll be probably billions of dollars. So they help keeping the company healthy in the right direction and helping the board make decisions as and when necessary. Okay. All right, so that's it for today. Hopefully you enjoyed it, and in next chapter we'll cover more details on the company, and probably get into a little bit onto aspects of the balance sheet, and go from there. Thank you.